What if I told you that tiny, everyday money habits are sabotaging your bank account? The worst part, you don't even realize you're making them. By the end of this video, you'll learn the 10 financial mistakes keeping you broke and exactly how to fix them. Let's dive in before you waste another dollar. Hey everyone, today we're tackling the 10 money mistakes that trap people in a cycle of debt and stress. These aren't just whoops moments, they're silent wealth killers. But don't worry, I'll break down why these mistakes happen, how they drain your cash, and exactly how to reverse them. Stick around. Number 5 alone costs the average person over $1 million in their lifetime. Money mistake number 1, not budgeting, the fastest way to stay broke. Let's be honest. If you're not keeping track of your money, you're letting it control you. Most people don't realize how much they're actually spending. A few dollars here, a couple of subscriptions there, an extra takeout meal because you're too tired to cook. It all adds up, and before you know it, your paycheck disappears, and you're left wondering where it all went. That's not just bad money management, it's financial self-sabotage. Think of it this way. Would you ever drive a car with no steering wheel? Of course not, but that's exactly what you're doing when you live without a budget. You're moving forward blindly, hoping for the best, but with no real direction. And hope is not a financial strategy. Here's how to fix it, and it's easier than you think. The good news, taking control of your money doesn't mean giving up everything you enjoy. It's about balance. A simple way to start is by using the 50-30-20 rule. 50% of your income goes toward needs, rent, bills, groceries, transportation. 30% is for wants, dining out, entertainment, shopping, hobbies. Yes, you can still have fun. 20% goes to savings or paying off debt. This is how you build real financial security. You don't need to be a math genius to make this work. Apps like Mint, 𝐌𝐨𝐫𝐞, you need a budget, or even a simple spreadsheet can do the heavy lifting for you. Set up automatic transfers so that every paycheck is divided into these categories. Once you see where your money's actually going, you'll feel more in control, and that's a game changer. The hardest part? Just starting. But here's the thing. Setting up a budget takes less than 10 minutes. That's it. 10 minutes to stop living paycheck to paycheck. 10 minutes to stop stressing over money. 10 minutes to put yourself on the path to financial freedom. You have two choices. Keep guessing and stay stuck, or take charge and start building wealth. The decision is yours. Money mistake number 2, lifestyle inflation, the silent wealth killer. You work hard, get a raise, and finally have some extra cash. So what do? Upgrade your car, move into a bigger place, splurge on designer clothes. After all, you deserve it, right? Here's the problem. Every time your income goes up, so do your expenses. Instead of getting ahead, you're just running on a more expensive treadmill. You earn more, but somehow you still have nothing left at the end of the month. That's lifestyle inflation, and it's why so many people stay broke no matter how much they make. How to break the cycle without feeling miserable? Here's a simple rule. Save half of every raise. If your paycheck goes up by $500 a month, put $250 straight into savings or investments. The rest, enjoy it guilt-free. This way, you're building wealth and still improving your lifestyle, just not at a pace that keeps you trapped in the same financial struggle. The truth is, financial freedom isn't about how much you make. It's about how much you keep. Earn more, spend smart, and watch your savings grow. Your future self will thank you. Money mistake number 3, no emergency fund, a disaster waiting to happen. Life doesn't send warnings. One day your car breaks down. The next you get hit with a surprise medical bill, or worse, you lose your job. Without savings, what happens? You swipe your credit card, take out a loan, or borrow from family. And just like that, you're drowning in debt. This is how people stay stuck, one unexpected expense at a time. It's not about if an emergency will happen, it's when. And if you're not prepared, it could set you back years. Here's how to fix it. Fast. Step 1. Save $1,000 as quickly as possible. Sell something, cut back on extras, do a side gig, whatever it takes. This is your first safety net. Step 2. Build it up to 3 to 6 months of living expenses. This isn't just a nice to have, it's what keeps you from spiraling into debt when life throws a curveball. Step 3. Keep it in a high-yield savings account, 4% plus interest, so your money grows while it sits. This way, your emergency fund isn't just sitting there, it's working for you. The bottom line? An emergency fund isn't optional. It's the difference between financial security and financial disaster. Start today. Your future self will thank you. Money mistake number 4, ignoring high-interest debt, a financial black hole. Let's talk about credit card debt, the silent killer of financial freedom. Those 20 to 30% interest rates, they're designed to keep you trapped. Paying only the minimum? That's a decades-long sentence of throwing your hard-earned money into a black hole. Here's some real talk. If you owe $10,000 at 25% interest and only pay the minimum, you could be in debt for 30 plus years. That's not just a bill, it's a financial emergency. How to escape? before it's too late. Step 1. Attack the highest interest debt first. This is the debt avalanche method. It saves you the most money in the long run. Every extra dollar you throw at high interest debt speeds up your freedom. Step 2. Negotiate. Call your credit card company and ask for a lower interest rate. You'd be surprised how often they agree. Step 3. Transfer your balance. Look for a 0% APR credit card and move your high interest debt over. This buys you time to pay it down without interest eating you alive. Debt is a weight, and the longer you ignore it, the heavier it gets. Take action now, because the sooner you do, the faster you take back control. Money mistake number 5, waiting to invest. The costliest delay of your life. Let's get one thing straight. Your cash is losing value every single day. Inflation eats away at your savings, and if you're just letting money sit in a regular bank account, you're falling behind. The longer you wait to invest, the harder it gets to build real wealth. Here's a crazy fact. If you start investing $500 a month at 25, you could be a millionaire by 60. But if you wait until 35, you'll have to save twice as much to reach the same goal. That's the brutal power of compound interest. Either it works for you or it works against you. How to get started, even if you're clueless. Step 1, start small. You don't need thousands to begin. Even $50 a month gets the ball rolling. Step 2, stick to simple investments. Index funds like the S&P 500 or a Roth IRA are solid choices. They grow your money over time with minimal effort. Step 3, use an investing app. Platforms like Vanguard, Fidelity, or Acorns make investing easy, even for beginners. The bottom line, waiting to invest is the same as throwing away free money. Start today. Your future self will be very glad you did. Money mistake number 6, impulse spending, the silent budget killer. Ever bought something on a whim and regretted it days later? You're not alone. Retail therapy, late night Amazon splurges, and those just because purchases add up fast. The average person blows $2,400 a year on things they don't even remember buying. That's money that could have gone towards savings, investments, or something actually life-changing. How to stop wasting money without hating your life. Step 1, the 24-hour rule. If something costs more than $50, wait a day before buying. Most of the time, you'll realize you don't need it. Step 2, ask yourself, will this still matter in 5 years? If the answer is no, put your wallet away. Step 3, remove temptation. Delete shopping apps, unsubscribe from marketing emails, and avoid browsing just for fun. If it's not in front of you, you won't miss it. Impulse spending isn't just about money, it's about control. Master it, and you'll have more cash for the things that truly matter. Money mistake number 7, no financial goals, drifting toward nowhere. If you don't have a plan for your money, someone else will. Banks, advertisers, and businesses all have one goal: to take as much of your money as possible. If you're not intentional with your finances, you'll fall into their trap, overspending, making impulsive choices, and ending up with nothing to show for it. No goals, no direction. That's how people stay stuck, earning and spending in an endless cycle, never getting ahead. The fix? Get serious about setting real financial goals. Vague ideas like, I should save more, or I need to invest, won't cut it. You need clear, actionable targets. Your goals should be smart, specific, measurable, achievable, relevant, and time-bound. Instead of saying, I want to save money, set a plan. I'll save $10,000 in 12 months by putting aside $833 per month. Instead of, I need to invest, say, I'll invest $200 per month into an S&P 500 index fund for the next 5 years. These aren't just wishes, they're roadmaps, and roadmaps lead to results. But setting goals isn't enough. You have to stay accountable. Write them down, track your progress weekly, adjust when needed. Seeing your progress will keep you motivated, and motivation turns into momentum. And here's the truth: hope doesn't build wealth, action does. The people who win financially aren't necessarily the smartest or the luckiest. They're the ones who set goals and stick to them. So the question is, are you ready to take control, or are you leaving your future to chance? Money mistake number 8, ruining your credit score, the costly trap you can't ignore. Your credit score isn't just a number, it's your financial reputation. It determines whether you get approved for a loan, the interest rates you'll pay, and even if a landlord will rent to you. Ignore it, and you could be throwing away hundreds of thousands of dollars over your lifetime. Imagine this: a 600 credit score versus a 750 could cost you an extra $300,000 in interest on a 30-year mortgage. That's money that could have gone toward investments, travel, or building your dream life. Instead, it goes straight into the bank's pockets. The good news? Fixing your credit is possible, but it takes action. Step 1. Pay your bills on time. Every single time. Late payments can tank your score fast. The easiest fix? Set up autopay for at least the minimum payment so you never forget. Step 2. Watch your credit utilization. This means keeping your balances low, ideally under 30% of your credit limit. If you're maxing out cards, lenders see you as a risk. Step 3. Check your credit report regularly. Errors happen, and they can hurt your score without you even knowing. Apps like Credit Karma or Experian help you monitor changes and dispute mistakes. A bad credit score makes everything in life more expensive. Car loans, home loans, even insurance rates. But a strong credit score saves you thousands, opens doors, and gives you financial freedom. Money mistake number 9, skipping insurance. A gamble you can't afford to lose. Nobody likes paying for insurance until they need it. Then suddenly, it's the only thing that matters. No health insurance? One hospital visit could bury you in $50,000 of medical debt. No car insurance? A single accident could wipe out your savings. No renter's insurance? A fire or theft could leave you with nothing. Here's the harsh truth. 66% of bankruptcies in the US are caused by medical bills. Thinking, "It won't happen to me," is the biggest mistake of all. The unexpected doesn't wait for you to be financially ready, it just happens. And when it does, the difference between a minor setback and total financial ruin is whether or not you're insured. So what's the solution? First, get term life insurance, especially if you have a family. If something happens to you, your loved ones shouldn't have to struggle financially. And here's the good news. It's not just for the rich. A $500,000 policy can cost as little as $20 a month, less than what most people spend on coffee. Second, prioritize health insurance. It's not just about avoiding massive ER bills. It's about ensuring you can get the care you need before a small health issue turns into a financial crisis. Marketplace plans, employer coverage, or even government programs. Find what works for you, but don't go without it. Third, don't overlook car and renter's insurance. Even if you're a great driver, accidents happen, and one bad day on the road can leave you drowning in debt. Renter's insurance, it's ridiculously cheap, as low as $10 to $20 a month, but could replace everything you own if disaster strikes. And homeowners, skipping insurance could mean losing your biggest asset in an instant. Insurance isn't just an expense, it's protection. Skipping it might save you a few bucks today, but it could cost you everything tomorrow. The reality is, you can't predict the future, but you can prepare for it. Get covered. Stay protected, because when life throws its worst at you, the last thing you want to worry about is how you're going to pay for it. Money mistake number 10, not negotiating your salary, leaving money on the table. Here's the hard truth. If you're not negotiating your salary, you're losing money, a lot of money. Accepting the first offer might feel easier, but over the course of your career, it could cost you over $1 million in lost earnings. Employers expect you to negotiate. If you don't, they won't just hand you extra cash out of kindness. You have to ask for it. So how do you do it? First, know your worth. Research salaries for your role on sites like Glassdoor, PayScale, or LinkedIn Salary. Walk into the conversation with data, not just hope. Second, practice your pitch. Keep it simple and direct. Based on my experience in market rates, I was expecting X dollars. No apologies, no hesitation, just confidence. Third, think long-term. Even a $5,000 raise today doesn't just help now, it compounds over time, affecting future raises, bonuses, and retirement savings. The biggest mistake? Thinking you don't have leverage. You do. The worst they can say is no. The best? You walk away with thousands more in your pocket. Always negotiate. It's not just about the money, it's about valuing yourself and making sure your paycheck reflects it. Let's be real. These money mistakes don't just sit there. They grow. And not in a good way. Every month you ignore them, you're robbing your future self. Picture this: retiring with nothing because you never started investing, paying hundreds of thousands extra on a home because you ignored your credit score, struggling when you didn't have to just because you put it off. But here's the good news. You're here, you're learning, and you can turn this around starting today. Don't wait for the perfect time. There isn't one. Just pick one thing and take action right now. Open a savings account. Call your credit card company and negotiate a lower rate. Invest $50, yes, even that small amount matters. Tiny steps taken consistently lead to massive change. If you're ready to take control of your finances, comment "I'm in" and commit to fixing at least one mistake today. Need a tool to help? Download my free debt tracker in the description. It's already helped thousands pay off over $50,000 in debt. And don't forget to subscribe and turn on notifications. Next week, I'll show you how to turn $100 into $1,000 with side hustles. Let's take action and build the financial future you deserve.